Everything can't work without real-time microtransactions, frictionless microtransactions. Kaspa is the solution. So it's always processed. So I'm waiting for the crash, I'm waiting for the stims, and that's when things start kicking off.
What's up, crypto crew? Welcome back, or if this is your first time, I'm Captain Crypto Might, actively escaping the matrix, scoping out the crypto ocean. So if you like your odds, get on the boat, stay up to date, thumbs up, and join the hunt.
Into the boat!
Crypto crew, the market has been moving sideways and Kaspa has been dipping, and I've seen a lot of comments in the comment section saying Kaspa is dead, Kaspa is a stable coin. If you are on this crypto ocean, this is part of the game. Your patience will be tested. And not only so, but we glory in tribulations also, knowing that tribulation worketh patience, and patience experience, and experience hope. Good things come to those who patiently wait. The bull run is not in full ignition yet, and therefore it is important to prepare for what is to come. During the first Kaspa in Enterprise event in September of 2024, there was an interesting guest speaker by the name of Siam Kid, who is also known as the Realistic Trader. Siam is a successful crypto hedge fund CIO, business owner, and professional trader. Listen to what he has to say when it comes to looking at this market, because sometimes, crypto crew, when in doubt, just zoom out.
There are three daddy charts, and this is the main one. This is the US Fed funds effective rate. This is US interest rates. These gray bits are economic recessions or stock market crashes. Every single time in recent history, so from 1955 onwards, every single time we've had a spike in interest rates and then the market starts cutting, we then have a crash. Whenever you have a plateauing, stocks melt up. And that's exactly what we've seen. And this was all like, we've called this long in advance. Now, when this starts cutting down, 2 to 4 consecutive cuts, it's game over. Now, there's a few other charts that all correlate into this. So this is a chart of local unemployment, basically. So whenever you see local lows for unemployment rates, it also leads into crashes. And one other thing is in inflation. Whenever you see a hiking of inflation, which is this green line over here, these three combined have a 100% track record. So we're seeing hiking of interest rates and inflation, local low of unemployment, and so we've got to brace. Now, in a nutshell, I see turbulence anytime from November this year to the end of 2025. Maybe Q1 2026. A lot of people talk about the PMI, so Purchasing Managers Index. So another way to sort of look at this is that middle line and upper line managers in big companies, they have to buy stuff from other countries. You know, if you're a purchasing manager in BMW and buying stuff from China, you're putting in some hefty orders. And so you'll see that this is pretty cyclical. When you put Bitcoin on top of the PMI, you'll see that there's some sort of pattern. And a lot of people have said that Bitcoin follows the PMI. It doesn't. It's a coincidence. It's not a correlation or causation. And the main reason for that is because of the liquidity cycle. So there's $350 trillion worth of debt on the planet. And most of that debt is corporate. A lot of it is on a 5 to 6 year cycle. Every 5 to 6 years, debt needs to be refinanced. And so every single year, there's roughly $70 trillion of worth of debt that has to be rolled over. This is why, and the PMI just follows this. So this chart rules everything. You can time everything from one chart, which is this. And so what we've had is a low around 2023, and that's because of QT, quantitative tightening, and all the banks were sort of squeezing up, but we're now on the upside, and this is going to tick up till about sort of end of 2025. But we're now on the upside, and this is going to tick up till about sort of end of 2025. And there's always a lag. So you have liquidity starting to spurt into everywhere, and then asset prices or risk on assets start to catch up, which is another reason why I'm very bullish in Kaspa and crypto in general, because 2025 should be that crazy bull market. Again, some crazy other things. The yield curve is, I expect, to start falling. Now rates are starting to cut. And the spread, this is also the scary one personally. So every single time we have an inverted yield curve, normally it hits the 0% line and then starts going north. At the 0.25% level, that's when the market breaks. That's when something breaks, we have a trigger event of some sort, everyone panics. When people panic, what happens? Liquidity just freezes and pisses off. And so you then have an inability to roll over some chunk of debt. This blue ghost feed is what I put down a couple of years ago. We're almost in this sort of hole of pain at the moment. You can see the correlation between global wealth and liquidity. So global liquidity equals asset prices going up and down. It is pretty much as simple as that. So yeah, lots of debt, most of it's on 5 to 6 years terms. So yeah, crashes is just simply when we have the inability to roll over debt. So what happens if you can't roll it on? Well, bad things happen, people panic. But the good news is crashes are compressed, or they are compressing. So typically crashes used to be two years long in duration, then 18 months, then a year. Crashes, because of the way that the world is intertwined with the internet and finance and derivatives, everything is speeding up. So we're seeing an increased amount of V reversals in all of these. So if there is a big tumble, just hodl through it, load up on the lows, okay? Because everyone will be scared. And you can see how Bitcoin reacts to global liquidity. At the moment, what we're seeing is global liquidity starting to increase and risk-on assets haven't really reacted, or Bitcoin hasn't reacted. And Bitcoin is the market pretty much at the moment. So global liquidity is shooting up. And you can see all this red. This is all over, central banks all over the world tightening. And you can see the green hue coming in over here. So this means this doesn't mean stimulus just yet. This is less tightening. And then next year, we will have the stimulus. But long story short, the US and the world just looks horrendous. Budget deficit as a percentage of GDP is horrendous. US debt to GDP is 120% and rising. US real estate and commercial real estate is going to go pop at some point. Long story short, if you're worried about crypto and whatnot, there are endless on-chain analytics out there. Most of them are showing that we are nowhere near a cycle high. The bigger picture shows that we're probably about a year away from cycle highs. People tend to take big profits after they are in big profits. So normally you're sat on mass profits and you're happy as Larry. Then something happens, the market starts spiking down, and then you panic sell out of it, right? That's typically what most people do. And you can see that with all of these spikes. People calling this an all-time high? No, we're nowhere near yet. We haven't had real fear. The pure multiple is a good mining indicator. They're under a bit of stress at the moment, so normally when this indicator gets around here, you see some sort of high. I've got some smooth brain bullet points which have kept me on the straight and narrow whenever you're unsure of stuff. So, aging population and a falling economic output equals lower GDP. Governments around the world have to do all sorts of fun and games to try and find some money, basically. So they do tax hikes, debase the currency a bit more. The US only makes 3.8 trillion a year. So as a percentage of its net receipts, it's huge. The governments will posture that they have control, but really they'll be like, oh, do we look after the sanctity of the dollar? Or do we kick the can down the road, protect our jobs, and just print? They'll always go for the print. They don't care about the sanctity and the integrity of the US dollar. So more borrowing equals rate cuts. We've just had them. The UK hasn't done it, but China's just doing it. The rest of the world will start slashing rates with the samurai sword. So printing equals more liquidity, and then crypto Valhalla beckons. Yeah, so everyone asks when. I don't know. It's not like a time-based thing for me, it's a process-driven thing. I've said on record a lot that Q4 2025 is where I'm expecting things to do well, but it's always process. So I'm waiting for the crash, I'm waiting for the stims, and that's when things start kicking off. So in 2017, I created this fractal model. It's a bit different than the 4-year cycle that people talk about. I personally take the 4-year, the halving as the beginning point. So if you are ever worried about any price volatility, just look at this, okay? And people get confused. You'll see, oh, is Kaspa broken the power law? And I think they're confusing volatility and the standard deviation of the power law. So no, it hasn't broken the power law. I think it has a better R-squared regression than Bitcoin does. But this is my favorite chart if you're ever sort of crying whilst looking at your portfolio. So this is the total crypto market cap chart, okay? Bear in mind, the retail Muppets took it to 3 trillion without BlackRock, without Fidelity, without VanEck, without Grayscale, without all of the big boys and girls. The interesting thing that I've personally found, because I've been trading for 20 years, I'm a chart person, as you probably guessed. One of my favorite patterns is a falling compression in a rising market, i.e. a falling sort of wedge in a rising market. Normally, about a year or so before cycle highs, we get a falling compression in the total crypto market cap. Where are we right now? falling compression. And therefore, this is a bit of a cop-out projection, but when people say, what do you think the total crypto market cap will be cycle high? That big green circle is a big number. It's anywhere between 5 trillion and 12 trillion. That's a huge number. I think it's not crazy to assume something like that, especially with what's coming down the pipe. You know, I'm a nobody from Norwich, England, and you know I've got my own little hedge fund, and you know that hedge fund we're about to get inflows. We'll be allocating 30% of that into Kaspa. It's just a case of money in, getting in. And I know many other fund managers out there, and there's so many other funds out there which are almost about to launch, almost about to get to inflows. And a lot of them are looking into Kaspa as well. From an industrialist perspective, for wide-scale adoption, Kaspa has to do everything in the most frictionless way possible. So if you take contactless payments, right, that came from nothing to everywhere within, 18 months? And that's because it piggybacked off existing infrastructure. People didn't have to change too many habits. If we want people to pay for their Starbucks with Kaspa, we can't expect the retail market to download this Kaspa wallet, go to Coinbase, whatever, buy some Kaspa, and then fanny about with their devices, whatever. They have to just do what they always do. They go and tap their phone or card, just like they normally do, and all the wizardry has to happen behind the scenes. The people don't have to understand what Kaspa is. The average user just needs to go into Starbucks, pay for their coffee, and the retailer, Starbucks or whatever, they have to have some wizardry behind the scenes where you have this on-ramp which converts their pound sterling into Kaspa, and that retailer has to be happy to accept Kaspa. So not just that, Internet of Things and the Internet of Everything can't work without real-time microtransactions, frictionless microtransactions. Kaspa is the solution. So Kaspa is the solution for, as you've seen from Rory, like the amount of different things that are happening. So
Kaspa has all the catalysts still to come, and we're not in the full ignition of the bull run yet. And that means that with everything that is to come, all the developments that are lining up for Kaspa, it would be best to just sit out and let the crypto ocean be the crypto ocean. But if you do have some powder, then now would be a great time to buy Kaspa under 20 cents. And not only so, but we glory in tribulations also, knowing that tribulation worketh patience, and patience experience, and experience hope. Good things come to those who patiently wait.
No dough, no show.
Fix your mind before you get to the grind. And with that said, let's continue to escape the matrix. Let's continue to be on the lookout for the next big thing here on the crypto ocean, growing grace, and let's make some crypto waves. Say aye.